Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 16th. My name is Eric Wilkinson on location. I'm going to get a couple of things out of the way. One thing to keep in mind is everything I talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data I missed yesterday traveling out to the East Coast here. We are in Stone Harbor, New Jersey. But let's talk about some of the economic data out of the U.S. anyway. We got core retail sales that came in at 0.6%, expected to be 0.3%, so anything better than expected there is good for the overall economy. That means the consumer is out there spending. Core retail sales is something that strips out food and energy and some of the automotive things like that that are a little bit longer duration type of purchases. We also have retail sales that adds all that stuff back in, came in at 0.5%, expected to be 0.1%. So good across all levels on the retail sales number. Unemployment, or sorry, Empire State Manufacturing Index yesterday came in at 25.6, expected to be 20.1, so good. That means manufacturing starting to pick up here in the United States. Crude oil inventories knocked it out of the park, coming in almost 9 million barrels above what was expected, that being coming in at a build of 6.8 million barrels, but it was expected to be a drawdown of 2.6 million barrels. Therefore, that's 9 million barrels over what was expected. Therefore, we can see the catalyst to what happened in crude oil inventories, or crude oil yesterday came down and slammed onto the 20-day, or yeah, the 20-day simple moving average. So today we're finding a little bit of support there, that same level, but again, we're seeing builds in crude oil and continued increased production out of the United States, which is increasing supply, and when you have higher supply with less demand, the price has to go down, right? All right, then on to the United States. Here today, we got in housing starts came in at 1.17 million units, expected to be 1.27 million units, so they're not starting new homes as rapidly as we expected. Also, we saw the permits start to pick up a little bit, pulling permits. Remember, I always talk about these permit numbers being a little wanky. They can pull as many permits as they want, but it doesn't mean that they really expect to build. It's really when we start seeing that number come off. Philly Fed came in at 11.9, way under the 21.9 expected. So Philly Fed really kind of slacking a little bit compared to what we saw out of the Empire manufacturing number being pretty good. So the manufacturing numbers being pretty good, but Philly coming in and kind of creating a little bit of a conundrum there. All right, let's talk about crude oil again. We are up a bit, maybe 7 cents or so, but for all intents and purposes, we are unchanged on the day. And I continue to see it wanting to stay in these 60s. I think crude oil is very well priced, somewhere between 60 and 70. Anything above 70, I think, is a little overdone, and anything below 60 is a little bit light for the economic conditions we're seeing with the market really starting to pick up. All right, gold futures. I think Joe Wisenthal yesterday, the stalwart on Twitter, was asking, who is bullish in gold that isn't always bullish in gold? Well, I'm not always bullish in gold, but I have to say after today's market move, it is really starting to look like gold has finally found a bottom. We need a confirmation, but this whole market move with this doji at the very bottom is a very strong sign of a market bottom, especially if it stays above that 23 Fibonacci level there. That will, any confirmation to the upside, really get the gold bugs back out there again, I believe. So, Joe, I'm on to the bullish train in gold now. Anyway, Bitcoin unchanged for all intents and purposes. No volume in here, you guys. I was really expecting this to turn around and start seeing. We built a nice little bottom, started getting a little bit of a rally, but again, this market with lower highs, lower lows, continuing to not make this chart look very good. So I'm not involved in Bitcoin. I don't plan to be involved in Bitcoin anytime soon. It just is not a very good setup for the market. Let's talk about the equities. We have found a bottom, it looks like, in equities after yesterday's big sell-off. We had a big sell-off and rally late in the day, confirmation to the upside today. So Dow Jones Industrial Average up over 300 points on the day. We can look at the NASDAQ again, another big move to the downside, test of the 50-day moving average, the value area high. Talked about all of those things. Those are things that the market really needs to do to kind of flush out some of the weaker hands before we can continue higher, and that's what we've done. We're seeing continued new higher highs and higher lows. This may be a little bit of an outlier here, but it hasn't really rolled over that much. We can continue to see this move higher in NASDAQ, especially with the pretty good economic data we've been getting. Retail sales has got to be a catalyst to drive the market higher as well. All right, this is a 30-minute chart. It's a little bit different than my other 30-minute chart of the E-mini S&Ps. You can see they're up 20 points on the day. The overnight session has stayed long and no attempt to flush out the longs from the overnight. That is a really bullish signal. A lot of times day session wants to print that whole range in there, but when they don't try and flush out either the shorts from overnight, in this case it would have been the longs, that is a very telling sign that the market is ready to move higher. I talked about this before when we saw that happen on the downside, that the market wasn't really trying to flush out the shorts from the overnight, that we were going to continue down, and that it was a little disconcerting. What have we had for the last couple of days? Sell-offs after that happened. So this, another similar situation where when you see the overnight inventory being long and the market doesn't try and flush them out, that is a very bullish sign. All right, so pretty bullish on the equities for at least the next few days. All right, let's talk about a few things that I've done. Facebook yesterday finally took a tank that I needed, and I am short the August that expire on Friday. So I'm getting a big gamma trade here. It goes $1 into the money. I'm losing big. It goes $1 out of the money on my short 180 calls in there. Then it's a total gamma trade, and I talked about that. I actually even have a webinar on how to trade gamma. But with Facebook, if you remember, I did the August 180 puts. 180 calls in there. I originally sold them for $1.08, and I bought them back for 68 cents this morning. So got out of my Facebook trade. It was very back and forth. Yes, I could have probably held on to it tomorrow, made a couple more dollars, but with this bouncing back and forth, I really don't want to be involved in that gamma right now. If you want to stay in it, that's fine, but I had a loser on, turned into a winner today, very close to 50% of my max profit. I'm happy to be walking away from that one. Facebook has been a roller coaster ride since my earnings trade in there, so happy to be out of it. Back to break even in Facebook, by the way. So all of that playing around in Facebook has basically brought me back to even, which is how you stay mechanical. I talk about this in the webinars and in the daily market commentaries. You guys know that, but in the webinars I even talk about this. How you stay mechanical is the way to stay ahead in this game. You can't just pack up and walk away when you got a loser on. Those are the ones that you have to actually really stay on top of in order to be successful in trading. So that's what I've done here, and that's worked out okay. Also, today's webinar is going to be on the Christmas tree. It is a part of the butterfly family, so we're going to talk about that one. We're going to add a bit of a short spread in there, and that's going to help us finance this butterfly. It's very similar to what you have seen before, but I'm going to throw a little twist on it. It's going to be a 1x3x2. Okay, so that's the way you would arb that out. Some people like to talk about it that way on the floor. We used to just call that a Christmas tree. So I'm going to show you how to set that up today to increase your probabilities of success. This is an advanced options type of trade, just for the difficulty in building it out. So that's where we're progressing to. So check it out at Pro Trader Strategies. That's all I got for you, other than if you can't take that, take it easy.